All right. So news drives the market. Again, if you've been watching the market, even just for the last 2 weeks, we've been on a roller coaster ride. We've been up, down, sideways, and it's all due to the type of news that's been coming out. So we've had the Feds say that they were cutting interest rates, which a lot of people thought were good. But then the Feds also said that next year we're going to get less cuts than we thought we were going to get initially. So then it dropped the market. Then the market was brought back up because people wanted to buy the dip. It's been a strong year. And then the market sold off because people are selling off for tax purposes before January 1st. So it's been a crazy wild ride going into the beginning of the year. And I always like to check the news before I start these sessions. So let me share my screen. We can get monitor, get monitor 2. All right, and let's just check some news real quick just to see what reports are coming. If there's nothing major, cool, we can keep going and look at some stocks and some charts, but we want to see what's coming. All right, so this is last week. All right, this week, no major reports, which is great. Well, except for Friday, we have a manufacturing PMI, which is like an inflation report, but nothing major. You can see the forecast and the prior is like a point off, pretty much the same. So no major scheduled reports happening this week. So this week should be smooth. And what news feed are you sharing? This news feed is coming from TradingView. They have a built-in news feed. So if you go to TradingView, you can hit the products, you go to calendar, and then economic calendar. If you don't have TradingView and you want to look at the calendar for the week, I like Market Watch. You can go to Google, type in economic calendar, Market Watch, and then you can check Market Watch's calendar. And then, or if you don't like that one either, you can just type in economic calendar and it'll bring up a whole bunch of websites. But I like TradingViews because this is where I chart and they already have a calendar here for me. And I have an earnings calendar, dividends calendar, so on and so forth. Does that help, Laura? Yes, cool, perfect. All right. Let's keep rocking and rolling. All right, so nothing this week. Let's go ahead and do our breakdown. So S&P 500, one of my favorite stocks. Let me hide a few of this, and I'm going to, if this is your first time looking at my chart, I know it may look intimidating, but really it's extremely simple once I tell you how everything works. Each one of these indicators pretty much chart and tell you a different thing about the stock. So these things are important because you need to know this information about the stock before you buy it, before you sell it, so on and so forth. That's kind of what separates trading from gambling, right? Gambling, there's no amount of information that can make the dice roll your way, unless you're shaving dice or like you're cheating. But in investing in trading, the more information you have, the better decision you can make based on what you're looking at. So this is my day chart. We're looking at the daily. I have my different time frames set here. I have a day chart, week chart, and a 4-hour chart. These are the different time frames that I like to look at. But right now, let's just focus on the day chart. So if we're looking at a day chart, we have all of these different indicators, but we can isolate on them individually to just make sure we know how they work. So this indicator here, this is called the RSI. Top left-hand corner is telling us what we're looking at. The RSI is pretty much telling you if the stock is overbought or underbought. You always need to know if a stock is overbought or underbought. You cannot just look at the price of a stock. So the S&P 500 right now is 595. You can't just look at 595 and say, oh, it is overbought, it is underbought. You don't know in reference to what it should be, right? So the RSI is a good tool to tell you, hey, the stock has been bought up a lot and is getting hot and eventually it's going to cool off, right? Or the stock is cold, it's been selling off a lot and people are about to start buying. So the RSI can help you with that. And the way that the RSI helps you with that is by figuring out what this number is, right? So this number currently is 49. So this purple area ranges from 30 at the bottom to 70 at the top. And it's really easy to use this because the only thing you have to do is figure out where your number is. So you got, again, 30 at the bottom, 70 at the top, 50 in the middle. And you see this purple line going through the chart. what you need to do is figure out if it's overbought or underbought. So the number is telling you if it's overbought or underbought. So underbought is going to be down towards 30, right? This is at 49, kind of right in the middle. So it's not overbought, it's not underbought. But the downside, if this was to come down from 49, let's say it dropped to 39 and down to 29, all the way down here, then it's going to be underbought, right? And then if it goes up, let's say tomorrow the market opens, it spikes, it pops, great news, it sends it up, it hits this top line like it did here. That means that the stock is overbought. So where you want to buy in at, you want to buy in when the stock is kind of in that range, but pointing up. If we're talking about swing trading, that means we want to buy low, sell high, right? So this is kind of giving you the gauge on if the stock is overbought or underbought, aside from just trying to look at the price and guess. Is $595 a good price for this stock? Is 600? Is 495? You don't know. But looking at the RSI is telling you, hey, this number on the daily is telling you this is overbought or underbought. So what I like to do, I like my number to be between 45 and 55. So 5 points below this dotted line or 5 points above the dotted line is where I like to have my RSI. I also like this line to be pointing up. So if it's between 45 and 55, which it is right now, it's at 49, but it is pointing down, I have to be cautious. So before I enter a trade, again, we'll look at some other stocks later to where the RSI is favorable. It's between 45 and 55, and it is pointing up. So when it's between 45 and 55 and it's pointing down, you may want to wait until it points up. A big part of trading is waiting for the right entry, entering at the right time. Sometimes you will be right that the stock is going up, but you just bought in at the wrong time, right? So again, RSI is telling you if the stock is underbought or overbought. Underbought down here at 30, overbought up here at 70. Your goal, if you're swing trading, in my opinion, buy it between 45 and 55 while this line is pointing up, and you want to take it up to 65.7, right? So for instance, when the line was right here, it was at 52. You would have bought in at 52, took it all the way up. Boom, it went up a little bit above 70 at 70.62. You would have took profit here, and then guess what? As soon as it hit 70, it was hot. It was overbought. People were buying it up, and it came all the way down, right? Same thing happened here. It went up. It was down even lower. This was at 42. Went up, hit around 70, and then it sold off. This is why you don't want to buy a 70 RSI. So when you're looking at the stock, if you see that the RSI is up against 70, to me, that's a signal to not buy. Now, if you're trading options and you're day trading, different conversation, because day traders can make money if the stock is going up or down. But if you're swing trading, again, 70 is hot. It went up. It went up. People are buying it up. Wait for it to cool off. Once it cools off, buy your entry, take it back up to 70. Do I have any questions about the RSI? Again, simple enough. Like I said, I'm going to make all of this stuff that looks complex really simple. Let me check the chat. Nope, no questions. All righty, let's keep rocking and rolling. All right. Oh, another thing about price. I know you're looking at it. $5.95 for this stock, crazy price, especially if you're new to trading, right? Who's going to spend $600 if you don't know what you're doing? The great thing about stocks now is that you can buy fractionals. Buying fractionals means that even though the stock is almost $600, if you only have $50, you can still buy the stock. You don't have to buy full whole shares at $5.95 per share. You can put in $50, $5, $17, $23, whatever you want to put in. We have fractionals now, and we can buy the stock regardless of its price. What you do want to focus on is the percentage gain, because that's going to be the same. So for instance, if you own this stock, let's say you owned $50 of this stock before Friday, and then the stock went down 1%, your $50 is going to go down 1% as well. So what you're after is the percent gain on the money that you invest. So again, if you put $40 and this stock goes up 10%, your $40 is going to go up 10% as well. So you don't have to rush when you don't, when you're starting out and buy a whole share at 600, or there are some stocks that's 2,000, 4,000. The biggest stock is like 600, 700,000. But what you're after is the percentage gain. Cool. Are we clear? I'll take silence as a thumbs up. All right. Next thing, the main body of the chart. So looking at the main body of the chart, one thing that I like to always note is how the candles work. The candles work in a really simple way. If it is green, that means that it is going up. If it is red, that means that it is going down. One caveat is that you need to know how these candles open and close. And what I mean by that is when the market opens, where does the candle start? And when the market closes, where does the candle end, right? So the market opens at 9. It officially opens at 9:30 Eastern Standard, and it closes at 4 o'clock p.m. Eastern Standard. So if we're looking at, we're just focusing on this one candle. And since we're on the day chart, right? If I hover over this, this is 1 day. That means that each and every one of these candles that you see on my screen represents the price fluctuation for 1 day. Each one is 1 day. So if I switch this over to the week, each candle represents 1 week, right? All right. So now that we know that one candle represents 1 day, if it opens at 9:30, it starts at the bottom of this green candle. And throughout the day, it builds its way up because it's showing that the price is going up. If you look out to my right, you can see the bottom of this candle is at 581. And throughout the day, it went up and it closed at 591. So it's a $10 pop for that day on a green candle. Now, red candles react the opposite way. So red candles build their way down. So this day, the candle opened at 601. And at the end of the day, the candle closed at 584. So this was a pullback. The stock went down. So it's always good to know, again, for future trading and investing, where these candles open and close at. A lot of people just know, like, oh, it was green this day, it went up, but where did it open and where did it close? That's one thing that I always like to tell my people. Even if you see something like this, that is considered a full day. The stock price barely moved because of the body of the candle, but this is the price action for 1 day. Next thing, what are these lines? These are called wicks. So if these are the bodies of the candles, all candles have wicks, right? The wick is just a shadow showing you where the stock went at some point during the day, right? So if we look at this red candle, we can see that it opened at 597, it closed at 595, but at some point during the day, it was as low as 590. So that means it could have, at lunchtime, it could have dropped all the way down to 590, but getting closer to the time that the market closed, people saw that it was low and just bought it back up. When they bought it back up, it closed here. So this tail or shadow is just showing you where it went for the day. Cool. Let's see, any questions? Cool. Silence is good to me. All right. Next thing, support and resistance. So, like I said earlier, when you're looking at stocks, you have to know that they don't go up forever and they don't come down forever. And everything that goes up must come down. So when you're looking at setting up a trade, you need to set up a ceiling and a floor to give you a realistic place that the stock can float in between, so you can know where I can make money at, right? You want to know, if I buy at 595, where do I get out at? Do I get out at 600? Do I get out at 610? Do I get out 650, 700? Where do I get out at, right? So that's where these two blue lines come in at. So they're called support and resistance. These two lines are drawn the same way, same exact way, same thing, right? These lines are your boundaries for where the stock is going to go and interact the most with the candles. So you can see this bottom line here, it went to 581. So I put a line at 581 because you want to set these lines where you have the stock moving in a direction and then it starts to chop. Normally you get 3 rejections and you place your line. So let's look here. Stock went up. It came up from 510, running, kind of chopped here. We could even put a line there. I'm not, just to keep everything clear. So it ran up, went here, kind of stuttered, pulled back. They bought it back up, kind of stuttered, went down. And then once it hit this price, you can see that it hit it more than 3 times and gave up, right? It hit it maybe 5 or 6 times. It kept trying to break through this price. It was hitting 580, 581. It couldn't get through, and then it gave up. So that tells you that this is a zone to where if the stock breaks on the way back, it's going to have a hard time getting through as well. So we placed our line here because, again, this is called your support or resistance line. I'll tell you the difference in a second. All right. So we placed the line here because 3 or more bounces, you put a line. So we got a line here. Okay, cool. We need another line. We need to encapsulate the full move. So we look here, the stock went up, and then it came down. Guess where it stopped at? So it went up, it came down, it stopped right at the same point that we placed the line before. Went up, it got close to this line, but that's not enough. Again, we need 3 or more touches to place our line. So it went up, got close, nope, came back down to this line, and then it bounced off. So that proves that this line was placed correctly because it is acting as support, right? So it's supporting the price. When it came down, it hit support, bounced off. And just think about support as like the table holding up your computer or your monitor. So it bounced off support, went up to this area here. And once it went up to this area, it started to act weird, started to chop and bounce off of this area. And it was doing it for a while. So it's kind of bouncing down in this area. And then after it broke through, it started to bounce downward on it before it actually broke. And then when it came back up, guess what? It checked in at that price again. So this is telling you that this price right here at about 600 is another choke point. So now we put our line there. We got a line here and there. So that means that this is a $20 range. You can get in at 580. You can take profit at 600. And you can see that it's been respecting this line since October. This line, this action around these price points started to form in October. And you can see how it is acting every time it comes into contact with that line. So it went up, came into contact, nope, bounced off. It stayed up here for a while. It didn't come back for about 2 weeks, came crashing down. This is a crazy day. Came crashing down. Guess what? Hit that price point. Nope, shot right back off and hit that resistance that we set. And then it started to come back down again. So the difference between support and resistance is that this is the current price, 595.01. The only difference between support and resistance is the line above or below the current stock price. So if the line is above your current stock price, this is called your resistance, aka your roof, right? If the line is below the current stock price, this is your support, aka the floor. So what you want to do when you're trading, you want to find a floor and a ceiling so you can figure out where you want to make money at, right? So sorry, it was someone trying to join. I think Mark got it. But this is how you want to enter your trade. So again, swing trading is buying low, selling high. Once you identify your zones for lows and you identify your zones for highs, you know where to buy and where to sell. So when the stock finally broke this line, it went all the way up, it came crashing down. Nice buy point, right? This is a nice buy point because we know that this is a floor for it. It bounced up. This is where you could have entered. And really for me, I like to wait for a confirmation candle, meaning if we're coming down red, I need about 2 green candles and then I'll jump in, right? You could do 1 green candle, but sometimes you can get faked out. You get a confirmation candle, 2 green, you'll go ahead and enter, and then you take this rod all the way up and you take profit here. So you would have got in at 580 to 581, took it up to 600, and you could take profit here. Now, if you wanted to be a little risky, you could have took it up to 605. 605 could work. You could have took it up to 605, and then you could have took profit. But I'm pretty sure at 605, you check your RSI, it was probably screaming. Let me see. 605, yep, you check 605. When the stock was here at 605, you can see the RSI was bumping up against 70. Again, 70 is the nice place to go ahead and take your profits before it takes a nosedive. But yeah, so again, support, line it up, resistance, line it up as well. That gives you a trading range. You know what's realistic. You know that this is not going from 580 to 1,000. This is going from 580 to 600 with confirmation. You can go ahead and enter once it hits its floor at 580, take profit at 600, rinse and repeat. You could have did that a few times here. Went up, came down, enter here, took profit there, came down, enter here, took profit there. Cool. All right. Let me stop here. Any questions? And I'll give you all 10 seconds, 5 seconds actually. Any questions in the chat? If I don't hear any questions, I'm thinking that we're all good. All right. Randall spoke for everyone. No, we're good. All right, let's keep rocking and rolling. All right. Next thing, MA ribbon. All right. So now we're getting a little funky. All right, so we have the MA ribbon. The MA ribbon is the moving average ribbon. Why do you need this? The moving average ribbon is telling you where your moving averages are going to be. And what is a moving average? A moving average is just the average stock price over whatever given period of time. So since we're looking at the day chart, These 4 lines are telling me different moving averages for different periods. Let me explain. If we look at the MA ribbon, we can see that we have a simple moving average, which is just a regular moving average. Again, moving average is the average price over any given period of time. We have a 20, 50, 100, and 200. So this is your 20-day moving average, 50-day moving average, 100, so on and so forth, right? So 20, 50, 100, and 200-day moving average. The cool thing about having these moving averages is that you don't have to focus on all of them. What you normally need to focus on is really the top 2. And honestly, if you're above this, if you're above your 20 MA, you really can just focus on that one. But focusing on the top 2, the 20 and the 50, is probably all you really need. These other 2, these are kind of like your safety nets. If the stock goes below its 100-day moving average, that's an opportunity to go long. And what I mean by going long, that's an opportunity to go ahead and buy at a steep discount and take profit once it moves up, higher. So the way that these work is that when you have these stacked in chronological order from least to greatest, again, let me show you. When you have 20, 50, 100, and 200 stacked in this color combination, yellow all the way down to blood red, the 20 and the 50 can act as bounce zones, right? So we can see that if I zoom out, when we have these untangled and they're in this clean chronological order, you can see how the candles are bouncing off of the 20. And the bounces are places to where we can take advantage and enter trades. So if it's bouncing off the 20, it went up here, came in contact with the 20, we could have entered here and took it up to resistance, took profit. It came down, this time it broke below the 20, went down to the 50. Again, waiting for confirmation will save you, because you got this green candle and then you got another green candle. You could have took it up to here, took profit based on your RSI. It would have came down, it hit that 20 again. So you can see, if I scrunch this up, even in this area, if I just, let me zoom in here. If we look at this, again, all of these are in chronological order. So you don't have to focus on all of them. You can just focus on that 20. It went up, hit the 20, bounced, hit the 20. It's just bouncing along the 20 going up. So you could go long, you could buy here and sell up here. You could buy here and just sell as it tops out every time. It just depends on your risk tolerance. But that's why I like to use this moving average combination, is because once they're stacked cleanly like this, I don't have to worry too much about what's in first place, what's in last place, when to enter, when to exit, so on and so forth. So when these are stacked, I like to just focus on the top 2, 20 and the 50. And as they bottom out, I check my other indicators. I check my RSI, see where it's at. Is it favorable? If it's favorable, then I may be ready to enter my trade. Any questions about the moving averages? Cool. Silence is a thumbs up. All right. Now, if 4 is too much, if you're just like, that's way too much to just look at on my screen, cool. Go here, go to the MA ribbon, and you can uncheck 2. Now you only have the 20 and the 50. Honestly, when I first started trading, I only had 2 moving averages. I could not look at 4. When I was swing trading, I just used 2. I didn't even use the 20 and the 50, which is way better than what I was using. I was using the 50 and the 200, which for people who've been trading for a while, you know that the 50 and the 200 are extremely slow. So I was like extremely slow and patient with the 50 and the 200. I don't recommend that. I recommend the 20 and the 50 if looking at all 4 is too much for you. 20 and the 50, they're moving a bit faster, especially that 20, and it gives you some opportunities to actually catch some trades on the bottom side of the 20 or the bottom side of the 50 after checking your RSI. Any questions about the moving averages? Cool. All right. Next thing, VRVP. This one, a little special. You don't have to know how to use this one, but for people who are in our group and who has been trading with us, they know the benefits of learning how to use this. This is a cheat code. The reason this is a cheat code is because it adjusts to your chart regardless of how many candles or how much information you have. So this is the VRVP. What does VRVP stand for? Let me open my data window. The VRVP stands for Visible Range Volume Profile. What does that mean? Simply, this is just showing you the volume profile for what's on the screen, how many candles and how much data you have on the screen. And what is a volume profile? A volume profile is just how many buys or sales are happening at a certain price point. So if I hover over, like let's take this node, these different levels or bars are called nodes. So if I hover over this node, you can see that, again, watch this window right here. If I hover over this node, you can see the total is at 247.93 M. That stands for 247.93 million, right? That's the volume that's happening here. That's the total volume for this level. Now, the special thing about the VRVP is that it separates it from buys and sales. So it's not just giving you a random volume count. It's telling you, hey, hovering over this, you got 105 million of sales. So down means selling volume, up means buying volume. So you have more people willing to buy at this price point. You got 140 million versus 105 million. 142 million is bigger than 105. So 142 is probably what's going to happen. So when you're looking at the different nodes, that's how you determine what's going on. Again, you don't have to start out with this, because I did it. I didn't start out with this. Some of my biggest trades, I didn't have this, but now I would say I'm more accurate by using this. Now, the difference with the levels, like as far as they stick out, they're just based on total volume. And then you will see this red line. This red line it's called the POC, it's the point of control. The only thing it's identifying is the point where the most volume is at. So right now, for the candles that we have in this window, this is where the most volume is located. Now, again, this is the VR part. It's called the visible range. So it is giving us the volume for what's viewable. So if I scrunch this up, you give it a second, it thinks and adjusts for you, right? And then if you zoom back in, give it a second, it thinks and adjusts for you, right? So that's why I say if you can get this one down, I know it's a little tricky. I know the volume part is probably a little funky, but if you can get this down, it helps you across all trading styles. Like even when you get down to day trading, when you're looking at minute charts, 5-minute charts, 15-minute charts, this is extremely helpful. But again, if it's too much too soon, I understand, but I still recommend checking this one out. Any questions about the VRVP? Cool. Last two, we have the MACD. Some people call it the MACD. I think that's too long. The MACD, just like Apple. The MACD is simple. This is called the moving average convergence divergence. Crazy name for a simple tool. The only thing this is telling you is if the stock is in a sell trend or a buy trend, right? You need to know that before you buy the stock. You do not want to buy a stock thinking it's in a buy trend that is trending up and is actually in a sell trend, meaning that as soon as you buy it, you start to lose money because it's going down. So the way that this is illustrating that to you is that you have a red line and a blue line. Again, all of these indicators are extremely simple once you know how they work. This one works based on whichever one is on top. That's it. So this red line is on top of this blue line. That means that we are in a sell trend. It's supported by looking at these bars down here. So if these bars are red, that means that we are in a confirmed sell trend for this time frame. So we're in a confirmed sell trend for the daily time frame. Now, if this blue line is on top of the red line, again, it's simple, whatever's on top. If this blue line is on top of the red line, that means that we're in a confirmed buy trend. So this is just telling you the trend is either going to be selling or buying, no in between. And if you're like, I can't figure it out, the lines are pretty close, I don't know, just check the histogram. If the histogram is green, it's buy. If the histogram is red, it is sell. Simple enough. Now, you do have faded areas on the histogram. So the faded green is saying that the buying trend is starting to weaken. What you'll notice is that once it's increasing, it's dark. Once it's weakening, it gets lighter. And then once it gets too weak, it switches over to red. So it goes from a buy trend, switches down over into a sell trend, and then it comes back up. So now that we're looking at this red area, you can see this red is getting lighter. That means that if this red continues to get lighter, the bars continue to get shorter. Guess what? We're going back to green and we're going back into a buy trend, meaning that this blue line is going to be on top of that red line. Extremely simple. Again, really long name, simple concept, simple indicator, but extremely helpful. Extremely helpful in determining if you should buy into the stock or if you should wait. Any questions? All righty, last indicator. So that one is about trend. So again, buy trend, sell trend. The last one, and again, you don't have to use all of these. These are just the indicators that I think that are important for you to note and for you to use when you swing trade. Now you can mix and match however you want. You can add other indicators. You can add ATR, whatever, FFA, whatever indicators you want to add, you can. I just think that these are the best for swing traders. Now you look at the last one. This is called the stock RSI. So it works similar to our normal RSI, but this is short for stochastics RSI. So this RSI is telling you the momentum of the stock. Why is that important? You want to know that if I get into this stock, does it have a lot of momentum to the upside, right? If a stock has a lot of momentum to the upside, that means that it's going to move up with some volatility. It's going to move up with some speed. So that means that this stock that's at 595, it has some decent volatility. It has some decent momentum, and it can have some volatility to the upside. That means that this could spike up to 605, 610 within one day, because our momentum indicator is telling us that, hey, we have some space, we have some room above to go up, and we just came from being low. All right, now the technical side of how this works. This ranges, like our normal RSI ranges from 30 to 70. This ranges from 20 at the bottom to 80 at the top in this blue area. Now, this the line can frequent 0 or 100, right? If I scrunch it up, you can see we hit 0 a lot, we hit 100 a lot. The way that this works is that what I like to do is once it hits 0, I'm waiting for it to come back onto this blue area, right? This blue area starts at 20. As soon as it gets into that 20, I'm watching for it to move up to 50. After 50, my next goal is 80. After 80, I may possibly take it up to 100. But once it bottoms out, because this is showing the direction of your momentum as well. So if this is bottoming out, that means that we have all the momentum in the world to the upside. So once we cross 20, I know, okay, we got some momentum. It's rolling. Let me get in. All my other indicators are checked off. Let me get in. Take it up to 50. Check my other indicators. Are we still good to take it up to 80? Yep, we can take it up to 80. Boom, take it up to 80. RSI may be getting hot at that point. I may go ahead and take profit. If there's more space on the RSI, I may go ahead and take it up to 100. But the closer you get to 100, the more likely you are to get a sharp pullback. All right, so sharp pullback here, sharp pullback there. Let me see. How do you know the exact time to enter in real time? So the exact time to enter in real time, since you're trading on a slow time frame, you're not trading on a day. I'm sorry, on a minute chart. So you're not day trading. The exact time, honestly, what I would do is watch this MACD. So I would make sure my RSI is good. One, I will also have my resistance and support mapped out. And then I will be watching this MACD for a MACD crossover to the upside. I like to play reversals. I like to get in stocks that are low. Again, I like to buy low, sell high. So this stock is pulling back. I want this MACD, this blue line, to get really close to this red line and cross over. So once it crosses over, we get this blue line to cross over the red line. That changes us from a sell trend into a buy trend. I want to be at the start of that buy trend so I can get all of the buy trend and hop out before they flip back over. Again, you can see they're oscillating. They change positions a lot. You got green. I mean, you got red, green, red, green, red, green, like it goes back and forth. So that means it won't stay green forever. You want to hop out while it's green and buy when it's red, right, before it crosses over. Does that help you, Randall? I guess he's going to write in the chat. All right, cool. But yeah, so that's my last indicator. Do I have any questions about anything? Again, I know looking at this from afar, it may be confusing. Randall says yes, perfect. I know it may look confusing, but again, once you know how each one of these work, it makes sense on why you need these to tell you certain information about the stock so you can make an informed decision on where to get in and where to get out. Cool. All right. We don't have any more questions. I'll go ahead and pass it over to Mark. I can see that we're already getting some stocks posted in the chat. But yeah, passing it over to you, Mark.
Perfect. Appreciate it. Give me a second to Share my screen. Perfect. All right, so the first stock we have is AT&T. All right, perfect. All right, so let's start off with drawing some support and resistance lines for the stock AT&T, and then we'll work from there. So if I was going to draw support, or excuse me, resistance, the current price is going to be $28.02. We can see that looking at this chart, this is going to be, is basically in this all-time high section. So I'm going to make my resistance at the top of these wicks. Why did I chose these wicks, these two wicks? Well, that's basically the highest point that the stock has been making it. And we see that from this point, we can see that they had a few times where it rejected this price. So that's why I made this my resistance. So if I was going to draw support, which is going to be our floor, the first place that I'm going to say is going to come and try to test is going to be here at about $26.50, $26.64 is going to be the first level. And why am I choosing this as my support? Well, just because of how this activity back here was. We can see from here, price tried to get here, rejected it, pulled back. Even when it was coming up, we see it was testing this level. So right now we have resistance at $29.82. And then we have support at about $26.64. Now, what happens if it breaks past this resistance level? Since this is the all-time highs, I would just start to treat it as $5 to $10 increments. So if it was to break above this $29.82 range, we're then going to be seeing this stock potentially make it to about $35, right? That's going to be a $5 increment. $35 to 40 is going to be where it can potentially make it to. Now, looking at support, if it was to break beneath our support here that we have at about $26.64, the next level is going to come and try to test is sitting at about $25.14. All right, so looking at the other indicators, let's start with the RSI. The RSI is pretty high for this stock. It's basically sitting at 70, which is in that overbought region. So we know that eventually this does need to cool down. So if this was to go up, it's probably going to just come and try to test at about this $29.82 range and then pull back from there. And then looking at the stochastic, we are in a downtrend from the stochastic where it was coming back. It's coming down from an overbought region and it's starting to cool down. We see it just tested, went beneath the 50 range, and now it's trying to come and test this 20 range. So that's the next place that it could be testing. And with that, again, that's going to be downwards pressure. So we could be seeing this stock decrease in value. And then we have the MACD on the weekly is really close to a crossover to the downside. So just be on the lookout for that. Again, that's another indicator that this could be coming down in value. If it was to come down again, it's going to first try to test 26.64. After that, it's going to come and try to test this $25 range. Ultimately, if it was to decrease, I would be a little bit careful just because a pattern that could potentially be forming, this could be a bullish flag, which is bullish, but this can also be a double top. So I'm seeing a potential double top happening here. And we know where the double top is. After the stock price breaks beneath this line here, which is called so after the stock price breaks beneath this $26.64 support range we have, which is also known as the neckline for the double top, we could be seeing this try to come back down to about, I'll say at about $20. That's what we could be seeing this potentially get to. So just be a little bit careful with that. If you see this break beneath this support of 26.64, that's why I would be a little bit careful, or excuse me, $25. If it breaks beneath 25, I would be looking to definitely sell some shares and take profit at this point if it was, just because we could be seeing a pullback happen. Any questions so far? Check the chat. Okay, I don't see any questions yet. Okay. All right, so let's check out the daily just to see if we can see which way it's going to be moving at the time for this week. Okay, so this week, and let's clear out these trend lines. So this week, I would definitely be waiting. I wouldn't be getting into a trade or anything just because looking at it, it looks like it's setting up for a pullback. If we can break beneath these two moving averages, which is going to be the 20-day moving average and then the 50-day moving average. If we break beneath those two moving averages, we're probably going to be seeing this stock get back to this $25 range. So it definitely, if you're in a trade, I would be getting ready to maybe shave some profits. Or if you're looking to get into a trade, I will be waiting. Looking at the stochastic, looking at the regular RSI, we see it's pointing downwards. It is in that sweet spot of 55, but it is pointing downwards. So we do have that downwards pressure that is probably happening on this RSI. And then that's stochastic as well. The stochastic's coming back from that overbought range and it's pulling down. Again, anytime, 9 times out of 10, when it tests 100, it's going to come and try to test 0. Now, it could reject at this 50, so just be on the lookout for that. But most of the time, we're going to see this trying to get back to that 0 range. And if you pair those two together and add in the MACD, we're really close to a crossover to the downside on the MACD. So with that, again, those are all bullish or bearish indicators, which is telling us that the stock price is going to go down. So I would just be a little bit careful. And again, if those things happen, we're probably going to be seeing this get to about $25. Now, when it hits 25, you can then just reanalyze the indicators to see if this is going to be the bottom, because we know 25 is a support level. You can see from the past when it tests 25, it started to turn around and go up. So you could catch it once it starts to test this level. If you see that it's strongly rejecting it, you can probably go ahead and get into a swing trade, buy here, and then potentially sell it when it gets close to this $29 range. Any questions on ATAT? Okay. All right. Okay, and I see that too with theirs. Okay. All right. So Exxon. Looking at the Exxon for the weekly, we charted this before. You see we have support here at about $69, or excuse me, 690. That's going to be our resistance level. Our support is going to be here at about $585. So it's still trading within that range. We see it's coming from a high, and it's starting to pull back. We're starting to see that cool down. Now, if it breaks beneath this 589 range, we're probably going to be seeing this get to about $500. And this is the weekly, so that may take a few months for it to happen. But the way that this is setting up, we may see this get to about 500, given that RSI level is high and it's pulling back, and that stochastic is also pulling back. And then if we look at the MACD, we can see here the buying pressure, the blue line, is getting closer and closer to that orange or red line, the selling pressure. And we know anytime the blue line crosses beneath the red line, that's going to be a downward. It's going to be trending downwards. So I'm thinking that if this continues to be red, we're probably going to end up seeing this get back to about $509. It may be a little bit more at that point. Our support may rise to about 510, 520. And that's just because of wherever this 20-day moving average is going to be. I'm going to use this 20-day moving average as my support. So wherever that 20-day is at, that's where the stock is going to get to. So currently, because the price is kind of high, we're going to continue to see this 20-day moving average increase. And as soon as I see it getting close to that, as soon as I see the price getting close to that 20-day, that may be a good place to go ahead and reevaluate this trade and go ahead and get into a play. And that's on the weekly. So if we look at the daily to see what's happening this week, we can see that stochastic is really low, and the stochastic is really low. RSI is pointing downwards, it's trying to get back to that 50 range, and we have crossover on the MACD to where the buying pressure is below the selling pressure. So I'm thinking this week we might see it probably get to back to about this 590 range. The support we have here is probably going to come and try to test this support level first and reject it. So if you see a rejection here, you may be able to get into a play, and I will do a swing trade up until wherever this 20-day moving average is going to be, which currently is at about 642. So if we have a rejection at this 591 range, we could see this get back to the 640 before it starts to pull back down. But I would just ultimately, I would be a little bit careful looking at the weekly, especially if you're trying to swing trade this for a long-term play or a medium trade. I would definitely be a little bit careful looking at that weekly because it does have room to continue to decrease on the weekly. So just be a little bit careful. But a quick swing trade for maybe 2 or 3 weeks, we could potentially see this get back to 640. Any questions on Exxon? Okay, perfect. All right. So let's take a look at MRX. Oh, the weekly. Okay. So first time charting this stock. I'm going to say we have support at about $32. Our resistance, all-time high levels, is about $32.26. If it was to break above that, $5 increments, the next place it can potentially reach is going to be $35. If it rejects that level and pulls back support, we can say our first level of support, we can say is right here at about $30.36, $30.40. After that, if it breaks beneath that, we're probably going to be seeing this get to about $28 or $29. It's going to be the next level of support. Excuse me. Now, looking at the indicators, RSI level is really high in that overbought region. Stochastic is also high. It hit 100. It hit 100. It's starting to try to pull back. So I would just be a little bit careful if I'm getting into a trade here. Give me 1 second. We might get a call. Excuse me. Sorry about that. But looking at again, the stochastic is pretty high. It's starting to pull back. I would be waiting for this to cool down. It looks like it needs to cool down. And again, I'm thinking a cool down period. I want to see what happens once it starts to hit this $29 range. I'm thinking the pullback for the cool down is going to probably get us at least to $29. And at that point, I'm looking to see what happens. And let's look at the daily, see what's happening. Oops. On the daily. Okay. So the daily is showing us we have room to go up. So we could be seeing this for the daily hit that 32 range. If it breaks above that, again, remember $5 increments. So we could be seeing this potentially get to about $35 this week. We'll just have to first wait for it to break this $32 range or $33 range resistance that we have. So we could be seeing $35 just looking at the indicators on the daily this week. But I would just still be a little bit careful. I know that this is probably going to be a strong line because this is all-time highs. So if we was to reject this level, we're going to be seeing this pull back down to this $30.40 range. But looking at the indicators, while the RSI level is high, we have a little bit of room on that stochastic on the daily to go up. And then because we just had a MACD crossover to the upside, we could be seeing it again get to about $35. So with that one, that would be, it's not gonna, that I would just be looking at it for that week. So I would be trying to get into play once it breaks above 32 and it's still the stochastic is in a nice spot. You can go ahead and play it to 35. And that's going to be probably a week or two for that to happen if that was to happen. But I wouldn't get in until after I can confirm that it can break and hold above this resistance level of 32.30. Any questions? Okay, perfect. MRX, W service now. Let's check out the weekly. Okay. Weekly. All right. So long-term trade or looking for a good entry point. This may not be the best time. Just where the RSI level is at. Stochastic is pretty high. This may need to pull back. If it was to pull back, probably going to be seeing it come and try to test about $1,035. I'm just using these candlesticks right here as my level of support. And if it was to break beneath that, it's going to come and try to test wherever this 20-week moving average is at. Currently is at $95.56. So we could be seeing it try to pull back down to that level. A long-term trade, you can see if we go back, this is a pretty good company, just looking at the earnings reports, just to do a quick little analysis of that. Got it. They basically beat all of their earnings except for one. So looking long-term, you could probably buy here. If it does pull back, just add to it, add more shares to it, right? But again, looking at the indicators, it looks like it needs to pull back. The stochastic is pretty high, RSI level is pretty high. The MACD, the buying pressure is starting to point downwards and try to get closer to that selling pressure. So, and with that, I'm thinking it'll probably pull back first to this level at 1,035. And then after that, if it breaks beneath that, we'll probably be seeing it get to $957, excuse me. And if we look at the daily, one second. Go ahead. I'm sorry, y'all. My dog was just wrapped itself in the covers and was having a hard time getting up. So we look at the daily. Stochastic RSI level is pretty low. And then we also have that RSI level pointing downwards. So I'm thinking that this is probably going to come and try to test this $1,035 range, which is our support level on the weekly. And you can also see that this is going to be our 50-day moving average. So with that, if it tests this area, I'm looking for a rejection. If it can reject this level on the week, we'll then be seeing the stock price get back to the 20-day moving average at least, which is going to be at its current price almost at $1,098. So if we was to see the stock price get back down to $1,035 and reject, we'll then be seeing this get to about this $1,095 or $1,098 range. Any questions? Okay. All right, let's see. Ross has a few more. So we'll go ARES. All right, two more. Check out the weekly. Okay, so weekly, looking like a good point if you're in this trade. Maybe shade profits. RSI level is pretty high. Stochastic is also high. Resistance, you can say resistance is going to be here almost at its current range. We can call it 170, 179. It would be resistance. After that, if it was to reject, I'm thinking support we can draw is going to be at this 20-week moving average. Excuse me. First level of support is going to be this 20-week moving average, which is going to be at about $163. And if it was to break beneath that, we can just use this 50-day moving average as our next level of support, which is also a strong support. As you can see here, stock price went up, tested 146, pulled back. Once it started going back up again, it tested this level again before pulling back, and then until it broke above it, it kept rejecting this level. So strong level of support. So if we was to see this stock price continue to trend down, first level, it's going to test 162, 68. And then after that, if it breaks beneath that, we'll probably be seeing it test about 145. Now, if it was to continue to go up, all-time high levels, as we can see, so $5 to $10 increments, the next place it can probably get to is going to be about 185 or 190. That's the price. But looking at the indicators again, it looks like it needs to cool down. MACD is about to have a crossover to the downside. It's really close to getting there. There's a little bit of separation, but we could see that crossover happen. Stochastic is high and that RSI level. So I would just be waiting for this to cool down. And once it cools down, look to get into a trade here. Yeah, let's check out the daily. So we can see from the daily, we could be seeing it go up this week, just looking at where the stochastic is at and the RSI level. You could see a rejection on this 50 of the stochastic and pullback. But if not, again, it'll probably, if anything, it'll get to about 185, 190, which is because this is the all-time high levels once it breaks this resistance we have. And if we needed to, we can draw our resistance a little bit higher and say about 183, 185 will be that resistance. Or 180. Yeah, we can say about 185 is that resistance level. And after that, we can see 190. Any questions? Check the chat. So one more. Here is a bit. Here it is. ISRG. Intuitive surgical. Weekly. All right. All right. So resistance for this stock, current price is $529, almost $530 is resistance, is the current price. Resistance for this is going to be sitting at about 550. All right, so that's our level of resistance. So if this was to reject and trend upwards, we're probably going to see it test about 550. We can see that it's currently is really close to testing that 20-day moving average. Is basically testing it. So if we can see this break beneath that 20-day moving average, we'll probably be seeing this get back to about $493, $494. That's where we'll probably be seeing this get to with a crossover. The MACD has crossed over, so it looks like this needs to cool down. It's really close to pulling back even more. And with that, again, 498, or excuse me, this 492 range is going to be where it's going to potentially make it to. After that, if it was to break beneath that, you can say about 445 is a 455, excuse me, is where it can potentially get to if it was to break this 490 range that we have as support. And let's check out the daily. Daily, just like the other ones, is showing us bullish momentum. So with that, I'm thinking it's probably going to come in test 549, and at that point reject from here. If it was to break above here, again, all-time high levels. So the next place it'll probably get to is going to be at about 555, 560 is where it'll probably go to. But ultimately, just looking at the weekly for long-term holds, this can probably be a little bit cheaper. So I would just be waiting for a better chance to get in. Now, if you want to do a day trade, if it breaks above and can hold above this 550 range, then you can play it to 555, 560. Yeah. So that's what I'm seeing on it. Any questions? Okay, perfect. Perfect. All right. So I'm going to go ahead and pass it all to Ladarius, and you can cover his stock picks for the week, and then also Ladarius those stocks that Ty posted in the chat as well. Don't forget about them.
All right, cool. Matter of fact, I can knock those out first because a few of those are on my list as well. Let me see. Did I answer all the questions in the chat? We had a good conversation going in the chat. And I can answer them now. So yeah, every single Sunday session is free. We've been doing this for what, going on 3 years. Every Sunday session is free, but we do have other sessions inside of the Discord. We have options to talk about potential day trades, things like that inside the session. I'm sorry, inside of the Discord sessions. Those sessions are hosted like inside of the Discord. For the most part, some are on Google Meet as well, depending on what we're going to be talking about. And then if you're into crypto, I know we had a crypto question. We have crypto sessions on Thursdays. And then you have, again, it's the same setup. So free session, if you want the free sessions, Sunday and Thursdays. Sunday is stock, Thursdays is crypto. And then, you become a member of the Discord, you have access to all of our other sessions and all of our picks and trades and things like that inside of the Discord. I think I answered the last one. And may I have your number to contact you as guidance? I think the best place would be in the Discord. That's where I'm at most of the time. That's where all of my like personal trades, my personal watch list, what I'm thinking day to day, what I'm looking at day to day. If you need something charted, like just how you all are asking me to chart, me and Mark to chart things here. Let's say tomorrow the market moves a certain way and you need something charted on the spot, you can post in the chat. We'll chart it out. And we actually make videos too. So we'll actually make a charted video per stock that you ask, and we'll post that in the Discord as well. So yeah, again, good conversation in the chat for the newer people. And let's continue on. Again, at the end, we can show you what the Discord looks like. Again, we do have a free version and a paid version. So if you want to check it out, the links are there. You may want to save them because once we close this out, you won't have access to the link unless, tomorrow we won't be able to do that. But yeah, you'll have access to the links. You may need those. All right, let's take a look at Ty's picks. I have a few of mine up already. What is she? I think I got lost in the sauce. Where are they at? Right there. NVIDIA, AMD, Uber, and Lyft. All right, let me share my screen. I'll use my SPY chart. All right. Looks like Ty just disconnected. And these are her stocks. All right, well, it'll be recorded. All right, so let's look at Uber. Where is she at? We're looking at, there we go. Oh no, she had NVIDIA first. All right, let's look at NVIDIA. NVIDIA, do I already have it up here? Yep, I was already looking at NVIDIA. All right, so NVIDIA, we'll start on the week. NVIDIA has been pulling back. We can see that it is down 2%. All of these blue lines just means that I've been charting this stock a lot. We can actually keep these. And looking at NVIDIA right now, it's been on a crazy run for the year. But what I've been saying for the most part, for people that want to get in on NVIDIA, they want to trade NVIDIA, is that you may want to be careful. I don't know if NVIDIA is going to double again next year. I don't think so. I think that, again, NVIDIA has been on a crazy run. This is October of 2023. This is what you can go back to October of 2024, and it pretty much tripled. But I do think we could potentially see like 145, 150 again to the upside. When will that be? I'm not sure. But looking at it on the weekly, it looks like it has been trading sideways. It's kind of cooling off. It is coming in contact with that 20-day moving average. We are still in a sell trend according to the week. But again, like Mark said, the week is really slow. So let's move over to the day. If we look at the day, we can see that the RSI is at 49 and it's pointing down. So it is pulling back. We can also see that the stock is kind of in a downtrend. We can see the VRVP. Let me move this out the way. We can see that the VRVP is telling us that there's a lot of volume in this area. And my bottom line right here is 127. So NVIDIA could go down to 127 if it breaks through 136. We can see on Friday, it went all the way down to 134 on a wick, but then the traders bought it back up right back above that 136 line. So if we get another test at 136 and we actually break that 136 line, we could be coming down to 130. After 130, it looks like, again, my worst case scenario for right now is 128. So that's the worst case scenario. But again, it has to break through the support, which again, this is kind of bullish because they bought it right back up to place it back above it. And the one thing that I'm kind of worried about with NVIDIA is, one, we have some weak. This is a weak crossover for the buyers, and then we have some weakness showing here on this buy trend. And then if we look at these stochastics, it's just pulling back. It's already above 80. I mean, it could go up to 100, but it is pointing down at 80, and we need a reversal soon. So if we can get a reversal, it'll send us back up. And if we go back up, I'm looking for 142. If we break through that 136, again, I'm looking at 127 after it breaks through 130. So right now, what I'm looking at is that it is cooling off, again, down Friday, and it could continue to cool based on what I'm looking at. Again, we look at the 4 hour. So that was the 1 day. We're going back to a lower time frame. So we're looking at the 4 hour, and we can see that, again, more cooling, more of a pullback. We can see where they bought it up on that candle. It bounced off this 20 MA. They bought it right back up. And then if we look at the other indicators, you look at that MACD, again, that light green is showing that buy trend is softening. And then you can see the stochastics RSI. We just came off of 100 and it's under 80. So it's pulling back. So a pullback is needed. A pullback is healthy. And it looks like we may, again, unless the market just pops up, because this is the last week or the last few trading days of the year, but it looks like people have been selling off and taking profits to trigger some tax events before January 1st, because again, you can do that as long as you sell, last trading day of the year. So the first day of the year, we could see some volatility back to the upside, but right now it looks like NVIDIA wants to cool off. The next stock she had was AMD. AMD was on my list as well, kind of read my mind. All right, looking at AMD, we can start on the weekly. We'll go back to the day and the 4 hour. Looking at AMD on the weekly, I have it in this downward channel. It has been making sort of a falling wedge. For those that don't know what a falling wedge is a pattern that could end up being bullish if this top trend line is broken. We can see that the stock moved up from $96 into this zone. And once it broke into the zone, it went up to 209, came down to 143, went up. So it's not breaking that that diagonal that it needs to break, right? It breaks this diagonal, and then we can pop out to the upside, and we'll start to play a bullish flag. But right now, it seems kind of stuck in this downward channel, and it looks like the bottom side of this channel, we could get as low as about 110 to 115. So right now it's at 125. Let me turn on my other moving averages to see where they are. Yep, so we're below our 50, 20, and 100, and we're coming down this 200 MA. Again, for the new people, first touch on the 200 moving day, on the 200 day or 200 week moving average should be a bounce. So if we get this low, and then you can also see on the VRVP, there's a lot of volume right here. So it's a block of volume. You also got the POC, which is the highest area of volume. A lot of volume just sitting right here. So if we continue to come down, it looks like we should be getting a bounce. If this falls about $9 or $10 more, we could be getting a bounce back to the upside. Also, if it moves to the upside, be careful because it has resistance around 134, 133. So $10 to the upside, $10 to the downside. This looks like it's going to be range bound for a second. And it looks like there's a lot of weight on the upside that's kind of pushing it down. And it looks like it wants to sit down longer, right? Again, if I move all of my indicators out the way, you can see that this is stuck in a downward channel. and after it reaches its low, and then it can pop back up, but it's making lower lows and lower highs, meaning that it keeps going down. So eventually we should see this move up. They do have earnings on the 4th of February, so in about a month, and we'll see where the stock lays before that. Let me see if I have any questions. NVIDIA head and shoulders may not work out. Yeah, the head and shoulders may not. It depends. Right now, it looks like it's cooling on NVIDIA's chart, but again, it's the last day of the year, last few trading days of the year. Anything can happen. And then can we explain Meta? Yep, we can check Meta out after I cover these. All right, AMD, again, in a downward trend. Turn on these indicators. Let's see what it looks like on the day. Yep, still in the same downtrend on the day. Let me look at those indicators here. Reset my chart to get a clean look. Ooh, under all of his moving averages. Yeah, it may come back up. Again, yeah, I got 130 to 135 is the highest, and then it's going back down. It keeps doing that. It's going up, and then it's going down even deeper, and then it goes up and it goes down even deeper. So just be careful with AMD. The next one was, I want to say she had Uber. If we look at Uber, I've been looking at this one for a while. So Uber has been pulling back. I have the floor for Uber at 57. I think $57 per share is a good price for Uber. I also think that Uber could be a nice stock to hold for years to come. I don't think Uber is going anywhere. It's just like I don't think DoorDash or any of the top gig stocks. Not, you got, TaskRabbit and all those. I'm not talking about those, but like premium stocks in that sector, just like Uber, Lyft could be one of them. DoorDash again could be moving up next year. So the thing that I want to see from Uber is a break. My entry for a quick trade would be a break above 64. Now, if I want to go long, if I want to invest, not trade in Uber, then I really want it on the floor at 57. I think, again, the reason why I keep saying 57 is, let me go to I'm on the day, go to the week. Oh, no, the day was right. Go to the week. I'm sorry. Go to the day, move these out the way. And you can see that we scrunched the chart up and move it around a little bit. You can see that right here at 57. It hit 57 back in January, here in August, and then it looks like it could hit it one more time in here in January. So if it pulls back to 57 again, that's good for me to go long. If it came all the way down to 48, that's even better, because again, I'm thinking about investing long term. This could easily be $100 stock, and if I can get in at $50, $60 and make $40 per share, I can load up on some shares and get a nice return in the future. But right now, it is pulling back, and I think that is going to continue to pull back unless, again, it breaks above the middle 60. So 63, 64, 65, it needs to break above, and then we can go to 66, which has been struggling to get there. But once we hit 66, I think we can hit a nice gap to take us back up to 73. So right now, my philosophy is, if you see it dropping, let it drop and pick it up off the floor and take it back to the upside. So right now it's at 61. And again, it looks like 57 would be better in my opinion. Any questions on Uber? Check on the weekly. Yep. So you can even see on the weekly how it's bouncing off this bottom trend line. You see it went red here, bounced off, went red there, bounced off green. And if it comes down again, you can take it back to the upside. So it's channeling right now. Eventually it's going to choose to break to one side. I think that if we once it finds its bottom and it comes back up, then we could be breaking that high of this is actually a high of, I can't even see the high. What is that? Like 86, 87. Again, $100 stock. It was just at 87 bucks in October before the pullback. Any questions on Uber? Let me check the chat. So when I join the free Discord, I'm getting the error. All right, cool. So Waquar, I think is how you pronounce your name. At the end, we can take a look at it. Not sure what's happening. I haven't seen anything on my phone, but we'll get you settled. after this. All right, so that's Uber, Lyft, which is the Pepsi to Uber's Coke. All right, $13 is also pulling back. It's doing what Uber is doing. I think bottom line for it could be $10. We talked about it. We've been talking about Lyft and Uber for a while. $13 could be a good price to start to dollar cost average. If you don't know what dollar cost averaging is, it is slowly buying the dip for when it pops back up. You have a really nice average, and you can take profits when it goes back to a known level. So the known level could be, let's say, $18 because the frequency's there. It hit here, here, and here. You see I scrunch it up. Actually, you can go to 20. Look at 20 here, 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 and this is 18 here, or 18, 19 here. So it looks like Lyft has been down. It's found its ground, and eventually it's going to come up off the ground. All of this came from COVID. If you were trading during the beginning and middle of COVID, then you would know what all of this is from. A lot of stocks, we call them the COVID darlings. Their chart look like this. You can look at DocuSign, Affirm, you name it. They all ran high. They came down to earth after COVID, found their ground, and then they're giving us an opportunity to go long. So Lyft could be $40 stock in the future, just like Uber could be a $100 stock. I don't think Lyft is going anywhere. I also don't think Uber would ever buy Lyft. It's just like Coca-Cola and Pepsi. I don't think, I mean, Coke has never tried. Well, I won't say never tried, but Coke hasn't bought out Pepsi. Pepsi hasn't bought out Coke. They kind of need each other to give, options to the industry. And I think that Lyft and Uber could be the same. Just finding, again, really nice entries will help. Right now, Uber's at $13, could get down as low as 10 for a nice buy, but I would be careful because this could spike back up to 20. And then once it goes to 20, I would be watching to see what happens because it keeps trying to break that 20 line and rejecting. Try here, 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 and then this is 19 here. So the next try, we could break through. And if we break through, the only thing we have in the way is this candle that dropped us down this low, and we could be climbing back up and hitting 40. So keep an eye out for that, and we'll see what happened with Lyft. Let me see. Does she have any other? Nope, she didn't list any other stocks. Cool. All right. So we already covered a few of mine. All right. What I want to take a look at now. So on my list, of course, I like to watch the SPY. I like to trade the SPY. The SPY is making a head and shoulders. If you don't know what a head and shoulders pattern is, it is a bearish pattern to where you have a shoulder formed, a head, and another shoulder. And I can show you a better picture so you won't think that I'm crazy and just making this up. Where is it? Head and shoulders. One of my favorite patterns. This is Investopedia. If you don't know, matter of fact, I'll put the article link in the chat. There you go. If you want to brush up on some patterns, but this is a head and shoulders pattern. And the head and shoulders pattern is a bearish pattern. It takes a long time to form, but it looks just like this. So it has a shoulder, head, shoulder, and it looks like 3 spikes with the middle being the largest. If we move over to the SPY and zoom in, not picture perfect, but we have a shoulder, a head, and another shoulder because we just rejected on this, right? So this means that the SPY could be coming back down to 580. Again, head and shoulder pattern shows that it looks like it's going up, but on the right-hand side, it's actually going down and breaking to the downside. This is why pattern recognition is pretty helpful when trading because you can spot things like this and you won't get, a lot of people are buying this thinking, oh, it may go back up and break the high, but this line right here rejected harshly, took it all the way down to the 50 MA, and then it was bought back up. So we'll see what happens, but this is forming a large bear pattern, meaning that we could see a pullback within the next week or two. So just be careful. All right. Rocket Lab. I actually traded this one last week. I could have had more profits, got a little greedy. I think I was up to like 50. It was like between like 45-50% profit on trading options with it. This is Rocket Lab. Rocket Lab is making a bull flag. A bull flag is a really simple pattern. A bull flag is a really simple pattern, one of the easiest patterns to spot because it's formed by a flagpole. A flagpole is just a really fast move up in an almost straight line. And then a flag is when it just scribbles out to the right side. So you can see kind of looks like a flag. If I do this, right, you can see strong move up on the pole, and then it's just bouncing in between this range. And eventually it's going to break out to the upside. So last week, I actually played the break to the upside on Rocket Lab, which was nice. And then it pulled back. I was waiting for this MACD to cross over right here. Look how close that is to the trend changing. I was playing the MACD crossover. It went up into the 28th, and then it came back down. So once it came back down, it triggered my stop loss. I hopped out. I think I had like 27% profit when I could have took the high 40s, potentially 50, but I was just trying to be patient and wait for it. But then the market decided to turn around. So still walked away with some profit, but I'm waiting for another entry here. Still like the setup. I like the flag that it's making. RSI is cooling off, which is actually good. So I'm going to wait until we get some upturn on that RSI. And I'm still hunting that MACD crossover. And then the stochastics is not bad at all. It's at 73. And I'm thinking about taking it up to 100. So Rocket Lab is in a good position on the day. On the week, you can see that flag even better. The RSI is crazy at 84. The top of the RSI, if you're wondering, where does the RSI max out at? It can go all the way up to 100. You can see here, it went up to about 94, and you can see 100 right here at the top line. But the higher you are above 70, the more dangerous. Again, I'm willing to take the risk on this one for intraday trading, because this is the weekly. It's moving kind of slow, and the day looks good. And when I made the trade last week, I literally hopped in and hopped out in about 2 days. But again, you can still see the bull flag being formed here. That's the stochastics, which is our momentum indicator, pushed to the downside, and we could be getting some movement up. Again, 27 is not bad. When I was looking at this, this was at what, like 23, 24. So it's still up from when I started to chart it last week. And again, just waiting for another entry, waiting for the indicators to turn up, and waiting just to take another ride back up to 28, potentially 30. So this one is on my watch list for the week. Do I have any questions? Send you the Discord link. Yep, I'll send it to you. Or Mark, can you post a link to the Discord for the chat? All right, next one. OKLO or Oklo. All right, this is a energy stock. You can tell I was trading it earlier behind that. All right. Zoom out some. All right, this is a energy stock, and again with this one, this is making a flag as well. So when you let me hide my MA ribbon so you can see it better. But you can see again, strong move up, and it's just chopping. So again, when you're good at identifying the range that it can bounce in between, you can really make some nice gains. So if let's say you were watching it at 25, it rejected, it came all the way down here to about 18. You could have took it back up to 25 for a nice sizable gain. Let's see, we were looking at it earlier. Look at the price range change, so we can pick here to there. So if you would have got in when it rejected off this 25, this is why, again, it's why it's good to pick your ranges. Once it rejected off 25, it came down. You could have entered at 18 and took it back up. This wick takes us up to about 25. So actually it's a little bit less than 40%, maybe like 38, 39% that you could have made just off holding shares and just off playing the bounce off of support and taking it up to resistance. So I'm still watching this one because I'm thinking that this could be a $40 stock. It is at 22. It has resistance at 25 that it keeps rejecting, but eventually it looks like it's going to break through because it ran up into it and it hasn't gave up this $18 line yet. The last touch that we had came crashing down and exploded off in about what, a week or two, all the way back up for, again, almost a 40% gain. So this is another one that I'm watching. I'm just waiting for it to cool off. What you'll notice is that when I have things on my watch list, some of them aren't actionable right then and there, and some of them are. This one is one that was actionable that I've been watching for a while. Easy play to the upside. And now I'm waiting for some more action to break to the top side at 25. So the stochastics needs to reset. It is at 90. Again, really strong move. It just came off of a lot of bullish momentum. That MACD did cross over. And then you can also see that the RSI is at 56 and it is pointing down. So that means that another entry could be forming. We just have to wait to see what happens throughout the week. And we could be set up by Thursday, Friday, or another run back to the upside. So really nice setup on Oklo. The week, you can see that flag a little bit better. Again, strong move up, chop, 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 chop. And then eventually we're going to break out the upside. Weekly RSI is at 61, which is nice. And then the stochastics is cooling off again, which is good, setting up for a move that we can make to the upside. Last stock, where is it at? Tesla. All right. Tesla is one that has finally broken out. I talked about Tesla stock like a dog because this was one of the first stocks that I bought. When I first started trading, I had like $40 to my name. I was just trying to make lunch money, and I was trading Tesla a lot. That was like the only stock I traded because that was the only thing I trusted at the time. And I was kind of upset when the stock kind of traded sideways for like 3 years after that. So from 2021 until now, let me show you what I mean. From 2021 until now, so this is what 2021 is back here. It kind of just stuck within this range, and it made a high back here in November of 21 at 411, and you can see today it's at 431. So for 3 years, it didn't make a new high, and I was like, all right, stock is done. But now the stock is at 431. It was just at about 480, 490. I actually made some trades. We did a day trade. What was that? 2 weeks ago, made 80% in 1 day off a day trade with Tesla popping up to the I want to say it was like 480, 485. So high volatility on Tesla right now is hot. It needs to cool off, but they have earnings. So they have earnings on January 22nd. If you don't know anything about earnings, this is kind of like the report card for stocks. And if they pass with flying colors, the stock is going to go up normally. And if they fail, the stock is going to go down normally. The reason why I keep saying normally is because forward outcast on or projected outcast plays a role as well. So for instance, if Tesla misses his earnings, but then they forecast that, oh, for the rest of 2025, we're going to exceed all of our earnings, the stock may go up even though they failed their report card. Also on the flip side, Tesla could blow his earnings out the water, but then say, oh yeah, for the rest of 2025, we're not going to make earnings. Then the stock will go down, even though the previous 3 months that they're reporting their earnings on, they passed. If they're letting you know they're going to fail in the future, people are going to take profit, run away, and get out the stock. So give me 1 second. Oh, all right, Mark got that in the chat. So yeah, Tesla is one that I'm watching for. This is on my list for 2025. I think that Tesla could run to about 550, 600. So keep an eye on this one. This is making an N-shaped pattern. So N-shaped pattern is, again, I like simple patterns. It moves up, moves down, and just moves back out the side with the same amount that it moved up into. So Tesla, again, could be running hot at about 550, 600 next year, especially with the fact that Elon has a government position. I can't see him not leveraging that for Tesla. So a few of the bottlenecks that Tesla has been running into in the past, they're probably not going to be bottlenecks anymore because Elon is probably going to leverage his position in the government to kind of make things favorable for either all EVs or just Tesla. I don't know yet, but some way, somehow, I don't think Elon will get involved in anything that wouldn't make his company any money. Especially is not going to get involved in anything that will make his company lose money. So this is something that I'm watching. I'm also going to watch this earnings. I think that once you start investing and you find like some of your favorite stocks, you want to pay attention to the earnings. They actually have like phone calls and presentations and things like that, to where they're talking about new cool products and how much money they plan on making. So then you can figure out, do I actually want to stay in this stock or do I need to leave and go find another stock, right? So Tesla is one that I'll watch. Again, I was an early investor in Tesla when I first started trading, and it was the stock that kind of got me hooked into trading. And this was one that I was swing trading for those 7 months that I just talked about. And now it's good to see that it's finally breaking out of a 3-year slump that it's been in. And it's going to be interesting to see where it goes next. All right, last stock. I said Tesla was last, but someone requested Meta. Let me back out some, clear this chart up. All right. Oh, here we go. All right, Meta. Meta has been hot. I said at the beginning of the year, if you were in our sessions at the beginning, I think it was at like what, 480. I said that Meta would hit 600. Meta is at 599. It's been higher. It's been even into the low 600s. But I think Meta is a great stock. It's definitely one of the better stocks in the top 10 as far as valuation. And what I mean by the top 10 in the S&P 500, I think that Meta is one of the more fair value stocks. You got Meta, Google, and I like Berkshire as well. Of course, people like Nvidia and all of the other high flyers, but I like the ones that haven't been getting any love because I think that that's where the money is made in stocks that people haven't gravitated towards yet, but they will be soon. So Meta is nice, even though it's had a nice run this year. I'm expecting it to be green overall next year as well. Right now, it has a 59 on the weekly, so it's kind of trading sideways. It looks like it is cooling off. It could come down to about 578, 580 in that range before moving back up. And then we just had a MACD crossover to the downside. So it switched from a buy trend to a sell trend. So again, just more signs of it cooling off. And then that stochastic is pulling back. So let's look at it on the day. We look at it on the day. It looks like 50 on the RSI. It is pointing down again, another sign of a cool off, and is going back into this channel that it broke out of. And it looks like I would watch out again, 580s to 570s. It looks like it could be doing a dance before it moves back up. And then the MACD, it was softening. We had some pink happening there, and then it got stronger in the downtrend with that deep red from the sell-off, again, from people tax harvesting for the new year. So watch this stock after January 1st. So January 1st, going into January is where we're really going to be able to see what's really happening, because right now people are taking profits like all across the board, and they're letting people, they'll take some heavy profits. They'll let the bag holders chase in, buy the stock up, and then they'll take more profits. And then more people buy in, they take more profit. They're slowly trimming their position for taxes. So I'm waiting on the big ones that have been running throughout the year. But overall, if you're looking for, again, something long-term, something you can just buy and relax, I don't think Meta would be a bad company. Again, it's one of the top 10 in the S&P 500. So that means that there's a lot of exposure to other portfolios, and there's a lot of coverage as far as news. And then stochastics low at 31, and it can move up to 50, 80, 100 because it just crossed that 20 line that I like. Any questions? Let me see. Trump has asked TikTok case to be paused. Drop may impact Meta negatively. Yeah, I mean, TikTok makes way too much money for them to just try to completely send it to the dark realm. But I think that I still don't think that it's going to impact Meta. So to say, I'm looking at the proposed ban on TikTok as a way to slow it down. I don't think they're ever going to get rid of it completely, but I think that once you tie a company up in litigation, and they got to spend a lot of their money and resources on fighting cases, and then their competitors don't, or their competitors who are already ahead and have a lot of money to fight cases, they can go ahead and get ahead or catch up. I think that's kind of what's going on there. So I think Meta will be okay. Even if TikTok get banned or not, because they're working on a whole bunch of other stuff, and they're studying TikTok. They're copying TikTok in certain ways. And I still think TikTok will be around, and I still think that Meta can go up in the same breath. They're just tying up TikTok to slow it down, in my opinion. I don't think they're ever going to really get rid of it. They just want to control it. But no, good observation, Ross. Any other questions? What time are we at? We're at 7:51. I appreciate you all for holding on. Again, we can look at some Discord stuff afterwards. This is the last session of the year. I'm also working on a few other things as far as a beginner's 6-week program. I can't spend all the time in the world on it, but I am willing to take 5 people under my wing to where I can teach them everything I know over the span of 6 weeks. So you get 6 one-on-ones, you get all of my courses, quizzes, the whole shebang. And I'm working on that now. So we'll talk about that later. But any questions about any of the stocks that we've covered thus far? Can I elaborate on my earlier comment on what's my trigger for actionable? Actionable means that the stock, like for instance, the stock is already running. So like if we're looking for actionable stock, what I mean by that is, let's say this MACD on this stock has crossed over to the upside. If I'm trading, I'm not going to talk options because that'll make it confusing for the newer people. Let's just talk simple swing trades. So actionable for me would be this MACD in the blue, this blue line curving up and preparing to cross over to the upside. So if we look at Rocket Lab, this was an example of something that I would have played. Rocket Lab was having a pending MACD crossover to the upside. It was spaced on the stochastics. The RSI was a little hot and it was testing its resistance and it actually broke. So I actually played it on that green candle to break above this blue line. And the action that I was trying to play was this MACD crossover. So actionable just means that I can actually trade it now. Like I can trade it tomorrow or the next day, so on and so forth. But a lot of the stocks that I add are actionable, but the other ones are more of like waitlist or watch list stocks. Like, okay, once this happens, I'll move it down the list and then I'll start to get ready to set it up. So that's more of like what we do in the Discord is I'm looking for something that I can trade soon, like tomorrow, next day, so on and so forth. But yeah, that's what I mean. But yeah. Any other questions? Good question. Oh, I don't see anything else. All right, it is 7:53. I don't think we'll have time for the pattern of the week, but I did introduce you to the head and shoulders pattern. I told you how it worked. I even gave you an example on the S&P 500 on the SPY, and we'll see how it plays out. So Mark, we'll just have, I guess we'll save that until next time or until next year, which is next week. But yeah, let me go ahead and stop the recording. The people at home. I said people at home, we're all at home. The people on, people that couldn't make it,